If you've not been following crypto for the last few years, you've missed a lot. But it's the tide now turning for crypto. In this video we'll take a look at the big news events that are still to come this year. Hello, if you're new here, my name is Chaz, I go by the name of The Risk On Investor, and this YouTube channel is documenting my journey to building a £1 million investment portfolio. If that's a journey you'd like to follow, or it's a journey you're on as well, hit the subscribe button below to be notified of more videos when they come out. Before we get on with the video, I just want to say that everything on this channel is my own opinion only. If you need financial advice, please seek the services of a paid professional. For many, crypto is dead. In May 2022, the Terra Luna project collapsed. The Terra Luna project had a stablecoin which pegged a token at the value of $1. When that collapsed, it wiped off $45 billion in value for that project, and over $300 billion in the wider crypto ecosystem. In June of 2022, Three Arrows Capital, which was a crypto hedge fund, defaulted on a $670 million loan. By July the 2nd, they'd filed for bankruptcy, owing over $3.5 billion. By July of 2022, Celsius, a major US exchange, also filed for bankruptcy after it had been found that they'd been gambling with user deposits. Then, by November 2022, FTX, another major US exchange, filed for bankruptcy after experiencing effectively a run on the bank on the exchange. The exchange was also found to have been misusing user funds. And finally, by late November 2022, another US exchange, BlockFi, filed for bankruptcy. Over the course of that year, the price of Bitcoin fell from almost $70,000 to around $16,000, a crash of almost 80%. But things might have changed. This week, we had the launch of a number of spot Bitcoin ETFs in the US, the largest of which by trading volume on the first day was the Grayscale Bitcoin ETF. The launch was so big, it's actually the biggest launch in terms of traded volume in the first day for an ETF in the US ever. So is investor risk appetite for Bitcoin back? So to try and answer that question, I've picked out some of the key things that are due to happen over the next 12 to 18 months to see if there really is any reason for us to get excited about crypto again. So the first exciting announcement from crypto has already come out, and I've touched on it earlier, and that's the spot Bitcoin ETFs. Now, a spot Bitcoin ETF is different from many of the products available in the US already, in that a spot product holds the underlying asset. That means the asset manager holds a pool of Bitcoin. Theoretically, that means as the price of the ETF is traded, it can have an impact on the underlying asset price. That means that there's potentially a money pipeline now from traditional Wall Street across to the crypto world. And that's something we've never seen from the largest market, the United States, before. Now, whilst the US spot Bitcoin ETFs aren't available in every country, some countries already have their own products. Unfortunately, for me here in the UK, I still can't access that as a product. So the first bit of major news that's still to come for crypto, again, centres around Bitcoin, and that's the Bitcoin halving. If you're not aware, every 210,000 blocks, which is about every 4 years, the amount of Bitcoin that's issued every 10 minutes when a new block is created halves. Currently, around 6.25 Bitcoin is issued per block, and that will halve to 3.125 at the time of the halving. Now, the halving is due to happen at around mid-April, but that can change slightly depending on how quickly Bitcoin blocks are mined. But what we do know about the Bitcoin halving is that historically, the 12 to 18 month period after the halving has seen massive price increases for Bitcoin. One potential explanation for that is basic supply and demand. If demand for Bitcoin stays the same, but the supply is cut in half, we can expect there to be a price equilibrium reached at a higher level than it is before the demand is cut in half. The next major bit of news coming out this year relates to the number 2 crypto by market cap, Ethereum. Ethereum has long been plagued with really high fees to use the network, and that's seen a lot of everyday users like you and me not being able to use the main layer 1 because it's so expensive. In response to that, the Ethereum roadmap is what's called a roll-up centric roadmap. That means there's going to be lots of other smaller networks that will build on top of Ethereum. They'll handle all the transactions and all the processing day to day and simply post that back to Ethereum. So Ethereum will effectively become the main ledger for a number of these other networks. But these other networks still have to settle their transactions back to Ethereum, and that still costs a lot of money. At the time of recording, an average transaction on layer 2 might cost 10 to 15 cents. Compare that with some of the other competing layer 1 blockchains like Solana, which is a fraction of a cent for a transaction, and you can see why would people choose the Ethereum layer 2s. Well, as part of Ethereum's upgrade roadmap, the first major part of that upgrade, known as proto-dank sharding, is due to go to testnet in the first quarter of this year, with potentially a full mainnet release later in the year. After that, there's still future upgrades coming for Ethereum to reduce the transaction fees for layer 2s even more. There's also different design decisions that layer 2s can make, which could mean using a different data availability layer, such as EigenLayer or Celestia, which can further reduce the costs that they have. By my simple calculations, once the next 2 main Ethereum scaling upgrades are made, if a layer 2 uses those 2 scaling upgrades, plus data availability from Celestia, that can be a 50,000 times decrease in transaction costs on an Ethereum layer 2. That's fractions of a cent per transaction. Once you get to that kind of level, it almost makes sense for the layer 2s to subsidize the costs so end users are effectively using it for free. And that would revolutionize a lot of cryptos and bring them much more into the mainstream. And finally, perhaps a slightly more boring piece of news still to come, but the US accounting rules are due to change in 2025. And part of that change is that it will allow companies to value some crypto assets on their balance sheet at fair value. So currently, if a company in the US holds a crypto asset on its balance sheet, the value goes down, the company notes an impairment loss in its company accounts. But as the crypto asset price increases, that impairment loss needs to still stay on the balance sheet. The new accounting rules will change that, and that could make holding certain cryptos, such as Bitcoin, much more attractive for large companies. That could bring billions of dollars in new money flowing into crypto. So what's my take on all this? Well, these main reasons, along with the fact that the market is generally expecting interest rates from central banks all across the Western world to start being cut this year, I think we could see a really good year for risk assets, in particular crypto. So if you follow my £0 to £1 million investment journey, which I'll leave a link to the video series here, you'll know that I've been positioning myself for a really good 12 to 18 months of crypto price action. I've not only started talking about it on the YouTube channel here, but I've been banging on about it in my newsletter. My newsletter covers both crypto and traditional financial topics that capture my interest in a week. There's also a bit more information about what I'm doing in my portfolio, and it also shows you where you can access the free beginners investing course. I'll leave links to all of those in the description below.